Well, what's going on, everybody? Michael Silva here. You're watching the Stock Market Brief Show. When will this melt up end? That's what we're going to talk about in today's video. We're going to go over some expected moves and some stock market indicators. Now, I'll tell you what, sentiment is shifting to very euphoric, and typically when it does, I start getting floods of comments. Now, most of these are saying, like, are you a bull yet or wrong again? And I think that people believe, and I'm going to address not only these comments, but I'm going to address other people that may think that I'm incredibly bearish. And I think that that's just headline readers, or they just see the thumbnail and they assume. Hopefully you watch the entire video, because if you don't, you're going to be misinformed. These same type of people came out during when I was talking about the potential change in trend over here when the market was hitting this bottom, and we talked about it potentially curling back up. And now we're going to say, okay, when it starts curling back over again, the parabolic star upticks, okay, most likely we'll get even more bullish type comments, or, you know, whatever the case is. Now, if you do pay close attention, or you're in the Patreon group, you know that we've been posting a lot of long setups. As you can see here, these are all long trades except for one, and we talked about that yesterday, how I was going to be trimming up my longs, right? We said we were going to trim up my longs, and then also update my risk parameters and add on a little hedge, which I did. And then today, actually, when Apple reported earnings and hit it lower earnings expected move, I actually reduced the hedge that I added, specifically added in a little bit more today on. Now, if we take a look, I'm going to bring you into the Patreon group so you can actually see some of these trade ideas. Now, it's just to give you an inside kind of look at what goes on in there. But you can see here the zones currently taking place. They're even just, they're bright red as of right now. So price action is getting to the higher end zone there, which could mean it's more overextended, right? Things are getting frothy. Now, if you join this Patreon, it's $9 a month, or just pay annually, it's $90, and you get access to the Discord. You got to sync Discord up, and then I post everything on there. So I got announcements, social media stuff, which is just, and then I got my watch list where I'll post up some watch list updates, which are from the long side, and then trade ideas. So these are all my trade ideas. They've been pretty much all long setups, minus a few, but there's a lot of stuff in there. And this is, I mean, I'm just showing you that I'm going to go fast because I'm not going to share all of them, but that's, I'm going to just going, you know, that was January 24th, you know, that was like 8 days ago, and that's all those charts are just within that. You get weekly expected moves where I give the updates on these weekly expected moves once a week there, and then I update the zones within this channel too, and you can download the zone document, and the zone document includes a lot more different products in there. And then also I give you access to my stock market indicators via a permalink, and then you get access to the community as well. So as I'm seeing it right now, yeah, things are getting pretty hot. If we take a look at the S&P 500, this was yesterday, so if we go ahead and click over to today, you can see here we're finished up 1.47%, getting outside of that expected move, and ding, 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 what do you know? We're hitting up into that 4,200 level. Didn't quite hit it, but that's going to be an important one to watch, because remember, we talked about areas of prior resistance and prior support, so it's going to be a big level to watch, okay, moving forward. Now, yesterday we talked about, you know, volatility. It's still here, and let me tell you this, volatility is still here, people, and I'll prove it to you, okay? So this was the expected move for the SPY on the 15-minute time frame, $6.32 expected move for the remainder of the week. That was as of yesterday, okay? What took place today? Well, guess what? We gapped up, we flagged right here, we broke through that flag, we flagged again, we came up, and we closed where? Within the expected move, right? 68% of the time, it finishes within there. We finished in there again. Did we come down to the Fed anchored VWAP? No, we did not today. We got close. We approached it, which we posted on Twitter, and then we did not get anywhere close to the weekly expected move. So I didn't do much trading today. I tried one Tesla trade from a long side, and then it was a flag. I lost a little bit, and then I flipped over to a short trade on Tesla, which made that back in a little bit. So lucky me. The weekly expected move, we're currently trading above it there. Now, I will show you that we had earnings, right? So what happened after the market, or after the close? You can see here after the close, we tagged that Fed anchored VWAP, and we found support right from that area. And we're currently trading back with where? Within the weekly expected move as it stands, okay? So tomorrow, make sure we watch that Fed anchored VWAP. Now I'll show you what the expected move is here momentarily, but let's take a look at the Qs. The Qs had a $7.7 expected move. This was the zone that we're looking at, and take a look at the price action today. It basically gapped through the weekly expected move, shot up higher, came back in, it touched that expected move and started moving back up through it. But after hours, you can see what? Well, we started coming back within that expected move, and we're not too far off the upper weekly expected move there too. You can see we came down and we touched that Fed anchored VWAP and it held. So if we start getting below that area, we could see potentially more sell side, or we can see a potential U-turn to play back up through that strength. Now, looking at a $5.23 expected move just for tomorrow, right? So yesterday, it was a $6 expected move. We had an entire day, including earnings, and now we have obviously some macro data coming out, pretty soon. You can see we have unemployment, non-farm, and so forth. We're looking at a $5.23 expected move, so 68% of the time it can end in here. Now remember, 68% of the time it ends in the weekly expected move too. So to finish within this area could be possible, but we'll see what drives that volatility and drives price, and how the market responds to that macro data that is coming out 1 hour before the market open. If we take a look at the Qs, we're looking at a $6.44 expected move, which can take us to right around that Fed anchored VWAP, or potentially all the way up here to around 317.50. So we know that the earnings came out. Apple, came down and touched this lower earnings expected move. This is when I actually reduced some of my hedge, which I shared on Twitter. Then we saw a big ramp back up and then kind of sank off there. So we'll see, how it impacts tomorrow's trading session. Amazon also is currently down on the trading session, but its lower weekly earnings expected move is around 102 to the downside, but all the way up to around 124 to the upside. So if we start catching bids, it's very possible that we can see these big names hit one of these areas. Take a look at Google. Google also got hit after hours on its earnings report, but it's not tagging anywhere close to its earnings expected move yet, both from the downside and to the upside, right? About 117 and about 199 to the downside there. We already talked that we have some big data coming out 1 hour before the market opens, and then we have ISM non-manufacturing PMI at 7 a.m., 10 a.m. Eastern Standard Time. Okay, let's look at a couple other things. The dollar today, this is kind of interesting. It is, if we're just looking at price action alone, this could be considered bullish. Why? Well, this is known as, a piercing pattern, right? It gapped. So you have one bearish candle right here. Let me redraw that. You have a bearish candle here, then you gap down, and then you closed more than 50% through that prior candle. This right here is a 2-bar reversal candle. So if we get follow through, could be bullish for the dollar where we start pushing up. So we'll see what takes place there tomorrow. I haven't shown this one for a while, but I figured I would show you, how it's reacting so far. But the moving average, the 10-period moving average on the CPC did cross down through that buy signal just the other day. And you can see we got a 1, 2, 3 strong days. This is very similar to how we saw that last kind of bear market rally here where we crossed down through it and we saw, 1, 2, 3, 4 days to the upside. The very same thing happened in March too as well. But you can see I'm highlighting all the times that took place. It came down a little bit, but then re-triggered here. It triggered here, went up for a few days, 4 days, got triggered here again, went up for a few days, and now we're getting triggered there as well. It's a sell signal if this thing comes all the way down and then crosses back up through that 0.8 marker. That has actually happened right before the start of 2022, which led us into this bear market territory. If we take a look at growth versus value, you can see here RSI on this relative strength line is getting to the overbought section, which means what? It means growth is outperforming value and it's getting a little frothy, right? And you can see that in the rate of change, the 10-period rate of change. We talked about it here, and it kind of pulled back slightly here, went up, and then pulled back slightly again. And then we started shooting back up into that overextended territory there on the rate of change as well. So now we have a rate of change that's moving into overextended territory on this line. And we also have the RSI getting overextended. All these red lines across the screen are just marking out when the rate of change crosses down through 0. You can see when that happened here. That's when that big sell-off came, big sell-off came, sell-off came, sell-off came, and so forth. Copper also today was down on the day, and this is interesting because we've been seeing this as a leading indicator in some cases. So for example, when the SPY puts in a lower low, but yet copper puts in a higher low, it is marked times where, hey, copper's telling us that there's strength up ahead. Maybe perhaps the SPY will follow. And that is exactly what's happened at every single time I'm highlighting in blue. And then the times I'm highlighting in red are showing the opposite. It's showing that, hey, copper put in a lower high where the SPY put in a higher high. Maybe that indicates that we might see a pullback. And we did, and we did, and we did, and we did. The reason why I'm showing that now is because copper had a closing, pretty big close today. I know it was only down 0.49, but it gapped up and then closed at the low. And you can see S&P 500 still rocketing higher. So we have a higher high there, lower high there. So we'll see if that divergence plays out. The Pring bottom fisher also crossed over to the downside while prices continue to push up there. So that is one thing to pay attention to. The bullish percent comp I'm just going to go through these quick. They're getting overextended, right? Obviously, a lot more. 85.10 on the RSI. BP NDX, so the Nasdaq 100 is now at 71.63. Just now has been 2 days in overextended territory. BP SPX is now 2 days in overextended territory at 72.01. The NYSE is been overextended for quite some time. It's now 83.64 on the RSI. Discretionary is now moving back into overbought conditions. Sorry, I've been saying oversold. 75.36. And then we have BP INFO at 77.0. So yes, things are getting frothy. Things are getting extended. I'd like to see, I'd be more bearish if we potentially see a change in trend if this thing crosses over, but we just have not got there yet. How am I approaching this market? I'm doing it as I always, say. If we're above this 5-day moving average and it is inclining, that's bullish. So do not get bearish. I mean, things can come down here, or we can potentially break through, make a U-turn, go back even higher. But you want to see a series of lower highs and lower lows and play that versus trying to really get aggressive shorting when the market's clearly going up. See you later, everybody. That's all I got for you.